morning. This is George Kachuk with Know Your Options Inc., reporting to you from the CME Group trading floor in Chicago. The equity market correction continues. The correction started about 2.5 weeks ago, and we haven't seen a bottom in sight yet. Now, we've had a lot of heavier volume selling days on the NASDAQ. NASDAQ started a correction, and now we have the S&P spilling over. S&P was holding up pretty good. Now that pierced through its 50-day moving average. It looks like the S&P may be heading for 1400. About a week ago, we talked about the things you should be doing in a correction, meaning raising cash, don't buy any new equities. You can hedge your position, you can put on some short positions. But another thing I want to talk about, what an investor should do, how can you spot a bottom, or if you see the market turning back up. Well, the method I used was a method developed and observed by William O'Neill, founder of Investors Business Daily. What Bill O'Neill found, that every market bottom started with, of course, obviously a rally attempt, but more importantly, a so-called follow-through day. And this follow-through day occurs anywhere from 4 to 10 days, or it could be 4 to 20 days after a bottoming rally attempt. Now, the key thing about this to remember is that every single market rally for the last 100 years started with a follow-through day. Now, but keep in mind, not all follow-through days led to sustained rally. So that's something you have to keep in mind. It's not an all-clear signal, but it does help you spot market bottoms. So what exactly is a follow-through day? A follow-through day is when the index, any index rises about 1.5% on increased volume greater than the day before. And this should again occur 4 to 10 days after a first rally attempt. So for example, last Monday, it looked like we might have saw a bottom in the NASDAQ and attempted to rally. It rallied Monday, Tuesday, Wednesday, and then Thursday, Friday, it failed. So if you tried to go in too early thinking that Monday and Tuesday, oh, big rally, let's get in, you would have been too early and you would have get knocked out. So looking back yesterday it looked like the NASDAQ might have found the bounce off about 3,000 level right below it, caught a bounce, and then today we're hitting a new low. So today we start the count over. Today would be the first day of an attempted rally. The NASDAQ touched its 200-day moving average, a little bit above it, trying to bounce off that. So as long as that bottom holds, that would be our day one, and then so Friday, 4 days later, would be the first day we could see if we saw any good action where the index rising about 1.5% in greater volume. And if it doesn't happen Friday, we'd look Monday, Tuesday, and so forth. Now, of course, if today's low gets undercut, we start the whole process over. Now, this system works very good. It helped us get into the market late December. We got our follow-through day signal. It worked this June and July, which again started the rally going in up until we failed a few weeks ago. So there's a few other little nuances to this follow-through day. You can contact us at Know Your Options Inc. I'd go over these things with you. But until then, don't forget, don't enter the long side of the market until you see a follow-through day. And good luck trading. This is George Kachuk with Know Your Options Inc., reporting to you from the CME Group trading floor. Good luck.